This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September 25th, 2015. Our time is 8:45 Mountain. A radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3 o'clock. And if you ever miss a radio show, Harold has them all archived and streaming live 24/7 for your convenience at two different websites, HESradio.com and Harold's website, rarecoloreddiamonds.com. You can connect with Harold at rarecoloreddiamonds.com or speak with him personally and privately, 1-800-432-1022. And I should remind you that we have a podcast. The podcast is through iTunes. Type in The World Financial Report on Radio. You will find us there. Our radio show goes anywhere you do. We are portable on your device. And it was another very busy week in the financial markets. Last Thursday, the Fed decided to not raise interest rates. Janet Yellen spoke this past Thursday and said that more than likely before the end of the year, they will raise rates. We'll have to wait and see on that. Also, there was a trading range with gold. Gold continues to trade between about $1,100 to about $1,200 in that zone. The Canadian dollar broke down to below 75 cents and popped up just a little bit above that. Also, the oil market volatility there. Caterpillar coming out and warning that the economy is not good for them. They're looking at cutting 10,000 jobs. Our featured diamond of the week from rarecoloreddiamonds.com is a 1+ carat radiant cut fancy blue-green. This is an extremely rare diamond, one of a kind worldwide. You can see the diamond, video of it, at rarecoloreddiamonds.com, featured diamond of the week. And later in the show, last week we talked about a blue diamond that's coming up for auction. This week it was announced there is a big pink diamond that is going to be auctioned. They're looking for a record price on that. But our featured diamond of the week, take a look at it at rarecoloreddiamonds.com. Featured diamond of the week, a 1+ carat radiant cut, fancy blue-green, extremely rare, one of a kind in the world. Harold, this is a very, very unique and museum quality piece diamond. Amazing.
It certainly is. To get the combination of blue and green is just extraordinarily rare. And again, this is just a beautiful diamond that we're going to enjoy telling you about around the second half of the show. So it was a very volatile week this week. Even though it was a high Jewish holidays on Wednesday and the trading was light, the fact is that the markets were extremely volatile. On Thursday, we saw gold up over $20, but it just can't seem to hold its rally. It's down almost $10 this morning. As Randy brought up at the beginning of the show, gold is trading in a range really between $1,080 and $1,180, a $100 spread. It would have to have two closes above 1180 in order for it to go to around the 12 to 1225 level. But again, as long as the U.S. dollar remains strong, there's no chance that gold is going to rally at this particular point. Again, we do anticipate that the gold market is going to sell off, again, as the U.S. dollar continues to strengthen. Now, even though the Fed did not raise interest rates at this last meeting in September, they are saying that that is going to happen before the end of the year. So we'll see what happens with that, but any rise in interest rates is going to add more strength to the U.S. dollar, which is only going to push gold further down. So again, I'm sticking with my prediction at this time that gold is going to come down to $1,000. That seems to be the area that this market should go to. Meanwhile, silver is down 8 cents today. It's at $15.17. Did hit a low of $14.91. Again, with this sell-off in gold, we do anticipate that gold will sell off more than silver. If gold does come down to 1,000, I anticipate that silver will go to 1150 to 1250 within that area. You've got the oil market, which is extremely volatile. It's up 90 cents today so far, trading at 45.81. What they are saying is that by 2020, oil could get back to around the $80 level. But what's going to happen in between now and then? I think the market has got to go lower. I think that Iran and Iraq are shipping cheap oil just to get some cash, and that's just going to add a lot more supply to an already oversaturated market. The U.S. dollar is trading at 96.25. It was down substantially on Thursday, but again, at this particular point, the market looks like it's got to break par fairly soon. Par being $1. Right now it's at 96.25. Again, it wouldn't take too much to get the U.S. dollar above par, where there's a lot of buy orders that are going to send the U.S. dollar up to 107 to 109, the same level that we saw back in the 90s. And again, at that point, we saw a low in gold of $250. This time, gold is not going to come down anywhere near that much, but again, it is going to come down from the high that we saw in 2011, which was at $1,920 when silver actually hit 50. So at this particular point, I see things remaining the same. Tremendous volatility in the stock market. It's up 163 points. At one point on Thursday, it was down almost 300 points on the day. So again, I have no money in the stock markets at all. I have no money sitting in anything paper whatsoever. I think that's a very dangerous situation to have money sitting in the stock market at this time because the volatility is extreme. The TSX has dropped all the way down to 13,000 and change. Right now it's at 13,423. And what really should happen is the country's stock market should reflect the economy within that country. And you know, where the TSX is starting to show that the Canadian economy is in trouble. That's why the Canadian dollar is so low and dropping further, because commodities are dropping. Oil is down and other commodities are down, and the Canadian dollar is tied in to the commodities market. So if we do see the opportunity for commodities to continue to go lower, watch for the Canadian dollar to go lower. In fact, I'm banking on that. The fact is that the Canadian dollar is fairly weak at this time, but is going to go substantially lower. Where some people feel that the Canadian dollar has bottomed out, it just doesn't look like that to me. It looks like the Canadian dollar is going to go down to 60 cents, which is extreme. It's a massive move on the downside, but again, until commodities and oil start to go higher, I just don't see, and the U.S. dollar starts to fall, which again, I just don't see happening at this particular point. So my strongest recommendations right now are to get out of paper assets. You're seeing the volatility in the stock market every single day. Don't forget the volatility that we saw in 2008 and 2009 when the Dow went from 14,000 to 6,500. You know, if you listen to your financial advisors, they'll tell you that, you know, if the Dow does correct and fall, it always comes back. Well, this last correction took over 6 years to come back. That's how bad things were. So again, that's not the way that I trade. That's not the way that I recommend markets. My feeling is that if there's too much risk in the market, sit on the sidelines. If you're in your 60s or 70s and you lose your money in stocks at this point, you're never, ever going to have enough time to make it back. So again, right now, with the volatility, with the uncertainty, with all the skullduggery and everything that's happening in the world markets right now, whether it's in China, where they're manipulating their own stock market, or manipulations going on in Europe because they're in horrendous financial shape, or the fact that the U.S. is doing everything they can to keep the Dow, you know, at a decent level. In my opinion, the Dow should be right now at about 10,000, not 16,000. But, you know, that's not going to happen. They're not going to let the Dow fall unless something catastrophic happens that makes it out of their control. Otherwise, I see the Dow going up to 20,000. Not that it warrants that, but that's where I see the Dow going to, unless, again, something catastrophic happens in the United States that's going to change that. But at this point, we know that we're in a manipulated market in the stock market in the U.S., in the metals markets in the U.S., and also in oil. So at this particular point, we just want to sit back and let the markets run its course. There's no money to be made in the paper asset markets at this point, so to be in them makes absolutely no sense. The fact is that I would say, if I was a betting man, that if you're in the stock market, the odds of losing your money, I'd say, are 80%. The chances of you making money in the market are 20%. Those are not good odds at this point. You're much better off sitting on the sidelines than taking a risk of losing most of your money, because there is no reason for these markets to go up substantially at this particular time. So, where I do believe that gold is going to drop because the U.S. dollar is going to strengthen. So I do believe that gold is going to come down to around the $1,000 level. What's also happening is that we are a few days away from receiving our license to trade or to actually import gold here in the United States and in Canada. That's coming up this week. So we've waited a long time. We put up a lot of money, over $10 million, in order to get this deal done in gold, and it looks like it's now going to happen. So when the timing is right, when I feel the gold is bottomed out and ready to make its move, I'm going to recommend to you to buy gold physically, and you're going to be able to buy it from us at spot price with no commissions. Now, in the gold market, you know, there's a buying price and there's a selling price. You always buy at the ask and sell at the bid. We're going to sell at the ask at the bid price. So we're going to allow you to buy gold at the price that most institutions allow people to sell at. So there's not going to be any commission to us, and there's not going to be any spread. And even looking at Kitco, they charge almost $25 spread on an ounce of gold. We're not going to charge anything. That means as soon as you buy gold from us, you're going to be able to buy gold at the selling price, at the bid price, and as soon as it moves up 1 penny, you're going to be in profits, and that is not possible with any other firm. We are very smart and very fortunate to call in a relationship that we've had for many, many, many decades, and because the gold market has been so slow with the price of gold down for the last 3 years, it was a perfect opportunity for us to come in and solidify a deal that's going to make our clients a tremendous amount of money. So again, as soon as that is done and ready to buy, we are going to make that available to you, and it'll be a very, very exciting time. We do believe we are going to get a massive rally again coming in the gold market. Now, the fact is that you don't want to trade gold. You don't want to finance gold. You do not want to leverage gold. You want to buy gold and take it home with you, or store it with a reputable firm like Brinks. You do not want to deal with the type of firms that are charging you interest and charging you storage fees. You want to own your gold outright. You don't want to finance it, and you want to take it home with you. I'll let you know exactly how to do that within the next week or so. But again, we are going to wait until the gold market is ripe and ready to buy. That's basically what's happening in the markets at this particular point. We're getting a lot of volatility, and again, with a Jewish holiday, a very high Jewish holiday this week, we saw a slowdown on Tuesday, Wednesday, and Thursday. In fact, a lot of the religious Jews take off the rest of the week. So that's why we're seeing a lot of the extreme moves in the market, because there's not a lot of traders in the market at this point. So, Randy, that's the way I see things. Right now, again, we're trading in a range in gold, but with the strength of the U.S. dollar, I see gold going further down over the shorter term.
We have this week an extremely rare, one-of-a-kind, worldwide featured diamond. From rarecoloreddiamonds.com, featured diamond of the week is a 1+ carat, radiant cut, fancy blue-green. If you've never seen a blue-green diamond, go to rarecoloreddiamonds.com and click on Featured Diamond of the Week. There's a video of the diamond there. It is a museum piece, and it's available for you to invest in if you would like to speak personally and privately with Harold. Connect with him at 1-800-432-1022, and the website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. Telephone number 1-800-432-1022. One of the top stories from our free weekly newsletter, and you can get your name on the list for our newsletter. It's the companion to our radio show. You can go through it in 5 minutes or spend hours if you like. Speak with Harold about getting your name on the list. We'll send it out to you. Albert Edwards warns, the next U.S. recession will surprise investors, and a desperate Fed's next move will be unprecedented. In a note to clients on Thursday, Edwards wrote, The next U.S. recession will probably arrive a lot sooner than most investors expect, and we will likely see more desperate monetary experimentation from the Fed. Bob Genjua of Nomura and I thought that this time we would see deeply negative interest rates in the U.S. and Europe. Sweden has led the way, dipping their toe below the waterline with their current negative 0.35 policy rates. But there will be more, much more along these lines. For if negative 0.35 is possible, why not negative 3.5 or less? It goes without saying that deeply negative interest rates would be accomplished and accompanied by a massive quantitative easing program in the United States. The last 7 years of the exploding central bank balance sheet will seem like Bundesbank monetary austerity compared to what is coming today. But we've had, according to some people, a period of expansion in the United States. It's not strong, but it is a bit of an expansion. And the next recession, according to Albert Edwards, because interest rates are so low, could mean, obviously, the United States, the Fed, moving similarly with what's happening in Sweden and Switzerland and other countries. In fact, Citigroup came out and said central banks will try to monetize government debt. Obviously, what they're talking about is quantitative easing. They print money and buy bonds. Monetize government debt when the next crisis hits. The financial crisis was a 100-year storm, an event so cataclysmic that it forced major central banks to flood the system with unprecedented liquidity and unconventional monetary policy. So when the next shock hits, adding a cup of water might not be much of a help. With major central banks such as the Federal Reserve, Bank of Japan, and the ECB at or below the zero lower bound of interest rates, there's a dearth of traditional ammunition in the form of further rate cuts to throw. There really is not to throw at any of the problems that might arise soon. A potential hard landing in China, which could ripple through the global economy, is the most readily identifiable impetus for an economic downturn in the near future. In the event that this does come to pass, monetary policymakers in advanced economies might have to resort to some creative methods of stimulus. And in this article, they go on to sort of mimic what Albert Edwards said. Some of the things the Fed and other central banks around the world might have to do are negative interest rates. And Harold, it's a situation right now where people need to prepare. We're seeing companies like, what did we have last week? HP laying off something like 30,000 people. Caterpillar announcing they're going to lay off 10,000 people. We're seeing some major layoffs. We're seeing corporations that are multinational saying that business is not good around the world. It would not surprise us at all if at some point we see the economy roll over. And if, as they're saying, the Fed is basically at zero interest rates, they're really not going to have much ammunition to try and stoke the fire to get things going again. And that's why, Harold, we really recommend people have hard assets in their portfolio. We're talking about diamonds, gold, and silver. And we have about 5 minutes left in our segment here.
Well, there's no doubt that hard assets certainly have their place, and it's probably never been more important than having them right now. Because, again, they're devaluing currencies at will. They could do anything that they want. A negative interest rate just doesn't make an awful lot of sense. And the reason that they would do that would be to try to promote it. It doesn't make any sense. I don't see why the banks would even get involved in that. So the fact is that if interest rates have been at zero for all these years, and they're going to try to attempt to raise interest rates sometime this year, if it doesn't go well, what is the next step? Is it to go to negative interest rates, to basically have to pay money to keep your money in the bank instead of getting anything back for it? So, again, these are frightening situations. confusing to most people. Most people cannot understand what the benefit of a negative interest rate would be and how that's actually going to help the economy. The bottom line is it isn't. Things haven't gotten any better in Switzerland at all with negative interest rates. So, again, I just don't like the way that this is heading. To me, it tells me that there's situations coming up that are going to be extreme that we don't want any part of. That's why I'm saying to get out of the risky assets and look to preserve your equity and your capital, because it isn't always about making money. It's about sometimes keeping what you have and not losing it. And I think that right now is one of the most important things, is not to lose your money, to be able to keep your assets in order to make the right move when the right move is available to make. And right now, there's very few ways that you could make money without taking a gigantic risk today. So, my feeling is to be ultra conservative and not look to go into anything that is risky in any way, shape, or form. And that means stocks, and it means bonds, and it means trading in the commodities markets or anything like that at this point. We've got to see the market settle down before we can see a clear direction as to which way we want to invest. And right now, everything is just way too volatile as far as stocks, bonds, commodities, and paper assets go. I don't want any part of it. Right now, we're just sitting back and waiting for the markets to come to us. And there are other opportunities. There are tremendous opportunities in hard assets like gold, like classic cars, like art, and soon to be gold again. So that's the way we're doing things, Randy. Right now, we're just sitting back, ultra-conservative, and not losing our money.
This week's featured diamond from rarecoloreddiamonds.com is a 1+ carat radiant cut fancy blue-green. If you've never seen a blue-green diamond before, take a look at rarecoloreddiamonds.com. Click on Featured Diamond of the Week. You'll see video of the diamond there. It's a rare, one-of-a-kind worldwide. Speak with Harold about investing in our featured diamond at rarecoloreddiamonds.com or 1-800-432-1022. That's 1-800-432-1022. Egon von Greyer's out of Switzerland, and he was a person who actually predicted that the Swiss would remove the Swiss euro peg at 120. It did end up happening. He's also an advocate for hard assets. Said Thursday, we had another one of these ridiculous moments when the whole world was focusing on what the Fed would do. Nobody seems to understand that the Fed hasn't got a clue what to do about the desperate situation they face. Whatever the Fed does will make absolutely no difference to a bankrupt United States and a bankrupt financial system. The United States should not have been running budget deficits for over 50 years. The United States also has debt of over $18 trillion, and the Fed's balance sheet is over $4.5 trillion. A proper interest rate policy would have stopped all of these excesses. And he goes on to add that he's really concerned about the Fed creating a bubble. And this bubble at some point could be pricked. And then we could find ourselves back to another financial crisis. If you're not too sure what to do in the environment that we're living in today, speak personally and privately, 100% confidential conversation with Harold Siegel. And Harold, he's a worldwide expert in diamonds, gold, and silver. Speak with him at 1-800-432-1022 or connect with him at rarecoloreddiamonds.com. We're going to come back and talk more about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September 25th, 2015. Our time is 9/11 Mountain. Our radio show runs on 630 CHED in Edmonton, Sunday at 3 in the afternoon. If you ever miss a radio show, don't forget the shows are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com, and on top of it, we have a podcast. We're portable. We go anywhere your portable device does. We're on iTunes. Type in The World Financial Report on Radio. You will find us there. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com or call 1-800-432-1022. Our featured diamond from Rare Colored Diamonds is a diamond that is really a museum piece. It's a 1+ carat radiant cut fancy blue-green. This is a one-of-a-kind, extremely rare diamond that is one-of-a-kind worldwide. Take a look at it at rarecoloreddiamonds.com. Featured Diamond of the Week we have a video of the diamond online. One of the stories that came out last week, there was a rare 12-carat blue-colored diamond known as the Blue Moon. It's coming up for auction and could fetch up to $55 million on November 11th in Geneva. And this week as well, we found out a 16-carat fancy vivid pink could fetch $28 million. And that's through Christie's on November the 10th in Geneva. They think it could go for up to $28 million. And some of the quotes from Jean-Marc Leberher, who's the managing director of Rio Tinto. And I was doing a little research this week about Rio Tinto and their Argyle tender. It looks like the tender is up October 21st. So we will have some results sometime around the third or end of the month of October with the Argyle tender. But Leberher said, "We see China's demand for high-end diamonds is largely stable because diamonds are seen as a status symbol for the rich. But we're also seeing a growing demand for the low-end diamonds used for fashion jewelries. Middle-class Chinese are not buying the high-quality diamonds at the moment, but at least they are getting into the diamond category. And to us, that is always a very good sign." He also said Rio Tinto remains optimistic about the longer-term prospects for the Chinese diamond market. The company expects the industry to grow by 8 to 9% a year for the decade, beginning in 2017, mostly driven by Chinese demand. China's taste for diamonds is evolving thanks to the country's growing middle class. Between 2001 and 2011, the share of Chinese who have middle class incomes jumped to 18% from 3%, according to a recent survey by Pew. And that quote from Jean-Marc Leberher, the managing director of Rio Tinto's Diamond Division. We know, Harold, that, and we have it in our free weekly newsletter, a report from Bain & Company. They've done 2 reports, and they say the Far East, India, China, Far East area is going to be a major growth area for diamonds. They've always been very strong on the hard asset gold and silver. Now they're coming to love diamonds. And we're finding out that no new diamond mines, very short supply of diamonds. And on top of it, you have a growing demand for diamonds. You take that into account with what we're dealing with, rare colored diamonds, the rarest of the rare. And obviously, over time, we believe there will be some very, very nice price appreciation in the diamonds that people are investing in today through rare colored diamonds.
Well, you bet they are, Randy, because, again, it's a longer-term situation. You don't buy a diamond and look to sell it in a couple of years. That is not the way that type of investment works. But we've seen massive, and I mean massive returns on certain diamonds over a longer period of time. We've talked about, back in 2003 that my company purchased a 2-carat vivid purplish pink Argyle when nobody was even really talking about Argyles at that point. I bought it for $350,000, which at that point was a lot of money, and now that diamond is worth almost $4 million. And when the mine closes, that diamond should be worth substantially more than that. So, again, we only have about 4 to 5 years till the Argyle mine closes. The Argyle mine produces 95% of the pink diamonds in the world, and that's going to end very, very soon. I think that Argyle pink diamonds are amongst the best investments that you could ever make. They will never decline in value because the mine is going to close. There are no new diamond mines that are coming online, and even if they did happen to find one, which it would be extremely, extremely rare, but if they did, it could take another 10 years for that to come back online. So, again, we're not worried about anybody finding another diamond mine that will produce pink diamonds. All we want is for our clients that purchase these diamonds to make a fortune with them, and that's what we believe is going to happen. They've already gone up substantially from where we bought them, but then on top of that, we also have seen a massive change in the Canadian and American dollar. Now, because diamonds through my company are priced in American dollars, a lot of my Canadian clients bought diamonds when the Canadian and American dollars were even. So being that the case, and now a few years later, the Canadian dollar is worth about 30% less than the U.S. dollar, now we're looking at a situation where our clients have picked up 30% just on the currency alone, let alone how much the diamond has gone up in value. So we're very, very excited about this. This was the reason that we recommended diamonds to our clients in the first place. The currency is a very important part of it because, as we've always said, we can sell our clients diamonds in British pounds, in Japanese yen, in Chinese yuan, wherever the currency market is the strongest. Right now, the strongest currency is the British pound. Next is the Swiss franc, then the euro, and then the U.S. dollar. That is going to change. The British currency, the pound sterling, will always be the strongest currency. At least it has been for a long, long time and will continue to be. However, the Swiss franc is not a heavily traded commodity. And then you look at what's happening in the euro. Well, the euro and the U.S. dollar should be at par very soon. There's no reason for the euro to go higher. In actual fact, the euro is definitely going to go lower, and that is going to push the U.S. dollar higher because when a currency gets devalued, it normally gets devalued against the reserve currency, which is the U.S. dollar. So we're very confident in the fact that the U.S. dollar is going to continue to go higher, and it's going to be a stronger currency than the euro, which is trading right now at around 111, 110 in that area. I see the U.S. dollar going to 107 to 109, and I see the euro going actually below that. So in my opinion, we should see a lot of action in the currency markets, and one of the biggest reasons for buying and investing in diamonds is because of reductions in the currency markets. So we definitely believe that we are going to see a very strong U.S. dollar, a very weak Canadian dollar, at least over the shorter term, and that, if we play this correctly, will make our clients a tremendous amount of money. So my feeling at this particular point is to buy diamonds. Put some diamonds away for the longer term, because you're going to find that a diamond, the right type of diamond, an argyle pink, a yellow flawless, a beautiful green blue, that type of diamond will do nothing but go up in value. And again, it could save your financial life because we could sell that in another currency and make money on the diamond and on the actual currency. And that's what the game plan is. So we're ecstatic about what's happening in the diamond market. We believe that the biggest returns are going to come in the next 5 to 6 years in the argyle pink diamond market, because soon there will not be any more pink diamonds. Looking at the featured diamond this week, it's a very, very rare diamond. To get a diamond that's blue is extremely rare. To get a diamond that's green is extremely rare. To get a diamond that's bluish green is almost impossible to get, and the color of that diamond will literally take your breath away. Again, Randy, what's happening in diamonds right now is pretty well unprecedented. We've never seen a situation before where diamonds have done what they're doing at this time. And again, add to it the fact that the Argyle mine is getting ready to close. We've just got an amazing opportunity to make a fortune in this market.
And we had a story last week. The Argyle mine is scheduled to close in 2021. So here we are, approximately 5 years away from the Argyle mine closing. Our featured diamond of the week from rarecoloreddiamonds.com is a plus 1 carat radiant cut fancy blue-green. Extremely rare, museum quality, one of a kind worldwide. See it at rarecoloreddiamonds.com, our featured diamond of the week. Harold has become a worldwide expert when it comes to investing in diamonds. In fact, he has been interviewed on Fox Business News, and at that time, he mentioned his concerns about China. And Deirdre Bolton, at that time, said that she didn't agree with him. But it turned out, in hindsight, Harold was right. Look at what's happening in China as we speak. Harold has also been on Bloomberg Television a few times, Bloomberg Radio. And if you'd like to see the interviews on Fox Business News, Bloomberg Television, we have them in our free weekly newsletter. We can send out the interviews to you. Harold was also on the Jerry Bobino Show, a show out of Aspen, Colorado. And Harold was on for a full hour, and it was an interesting interview because you really got a chance to find out about Harold and his business philosophy and his investment philosophy. Harold has become a worldwide expert when it comes to investing in diamonds, and his website, rarecoloreddiamonds.com, also his auction site, hsfineauctions.com, a worldwide leader in auctions for hard assets. Harold, it's one of those things that we remind people about. Not only, as we touched on the last show, do you have some of Liz Taylor's finest jewelry that obviously at some point you will put up for auction, or obviously let an investor take off your hands. But you have the rarest diamonds on the planet through rarecoloreddiamonds.com, and you're being asked for interviews all the time.
Well, thank you very much. We have, not only do we have rarecoloreddiamonds.com, which is our investment quality diamond business, but then on top of that, we also have Diamante Atelier. And the Diamante Atelier is our jewelry division. We have over 5,000 pieces of museum-quality jewelry that will literally take your breath away. And these are all available. So our company is not just a one-dimensional company. Our company has several divisions. We have our investment division in the actual rare diamond market, which is rarecoloreddiamonds.com. Then we have our secondary market, which is to resell our clients' diamonds, and that's HES Fine Auctions. It's the only company of its kind. It's literally a virtual live auction. Nothing like this exists anywhere in the business whatsoever. We're the only company that has this. Then on top of that, we have our mining division, because we do mine diamonds. In fact, my partners are from Venezuela, from Central America and South America, and they have been in the mining business for going on 4 generations now. So we have a mining division that actually we mine our own diamonds, white diamonds, and we're also involved in the investment aspect of the colored diamond market. So it's a very, very exciting business. And what we hope to do is to change the diamond market, make it available for not only the extremely wealthy, but people that are just hardworking people that want to make a decent return on their money. And that's what the diamond business gives you. Because the fact is that there are certain diamonds, like yellow flawless diamonds. You can get involved in yellow flawless diamonds for $15,000 to $20,000 a carat. They increase by 15% a year, and they never, ever decline in value. So you look at an investment that gives you 15% a year. If you put that diamond away for 10 years, you've made 200% return on your money. And that's not available in most markets. So again, at this particular point, all we want to do is direct our clients to the safest and most profitable markets. As I said at the beginning of the show, it's all about capital preservation. It's all about keeping your money. But there's nothing wrong with being in an investment that's going to return a nice return to you. And we believe that yellow flawless diamonds will continue to increase in value, as they're very, very difficult to get. And then the Argyle pinks, we believe over the next 5 to 10 years, because you want to buy the diamonds now, you want to put them away till the mine closes, give it a few years for the diamonds to run out. You're looking at some diamonds that could go up 2, 3, 4, 500% or more. In actual fact, there's some Argyle vivid pink diamonds that could go up 1,000%. That's not available in any other marketplace. So again, at this point, Randy, when you look at all the investment opportunities out there, stocks and bonds and commodities and futures and everything out there, there is nothing that compares to the diamond market for safety, for preservation, and for profit, and that's exactly why we've recommended this market. And look at the difference in the currency markets since we've recommended these markets to you. Again, we've made money on our diamonds, but we're making over 30%, soon to be 50% when the Canadian dollar falls further and the U.S. dollar takes off. So, again, at this point, I just think it'll turn out to be about the best investment that our clients have ever made.
RareColoredDiamonds.com is the website. Our featured diamond of the week, a plus 1 carat, radiant cut, fancy blue-green, extremely rare, one of a kind, a museum piece. If you'd like to see it, go to RareColoredDiamonds.com, click on Featured Diamond of the Week. There is video of the diamond there. If you'd like to see the interviews that Harold has done about diamonds, we'll be happy to send you our free weekly newsletter, send out the interviews to you. And in the last year, Rare Colored Diamonds and Diamante Atelier have sold a 1.55 fancy deep green diamond ring and a .66 Marquis Fancy Intense Orange Yellow Diamond, also an Argyle Pink Diamond necklace valued at around $900,000. And there are some transactions, investments that are 100% confidential. We'd love to tell you about them, but we can't. If you were to know the facts on those, you would be literally stunned as to what's happening in the diamond market. And Harold, I completely understand why when somebody makes an investment in a diamond that they would want to keep it private because they don't want the world to know exactly what they have. Because if we get into a situation, as we saw during the financial crisis, or even as we saw in Cyprus and Greece, crazy things start to happen. And you might not want people to know exactly what you have when it comes to your personal assets.
Well, that's very true. You know, with a diamond, it's portable private wealth. So most transactions are totally private. And that's extremely important because there's such a thing as burning a diamond. It means that if too many people see it, it becomes commonplace, and then the diamond doesn't have as much of the value as the cutter who cut it wants it to have. So, again, there are many transactions that are totally private for obvious reasons, and that's the way that we deal in this business also. So, again, we're really excited about what's happening in the diamond market because when you look at most other investments, they don't look good right now. They're very risky and extremely dangerous. So, again, that's not the case in diamonds because certain diamonds have track records that never, ever lose their value, and that's extremely important in a volatile time like we're in right now.
Connect with Harold at RareColoredDiamonds.com. RareColoredDiamonds.com, or speak personally and privately with him. The conversation is 100% confidential. 1-800-432-1022, and ask about our featured diamond, a plus 1 carat, 1 plus carat radiant cut, fancy green, and this is a fancy blue-green diamond, extremely rare, one of a kind worldwide. See it online, see the video at RareColoredDiamonds.com, featured diamond of the week. And if you take a look at some of the top reasons to invest in colored diamonds, and it's been 10 years since Harold brought this idea to us. He brought it to us originally in an article in August of 2005. So here we are in September of 2015. Rare Colored Diamonds has been around for the website over 10 years. The article is Naturally Fancy Colored Diamonds, the Best Kept Secret. And since that point in time, Harold's clients have done very, very well in diamonds. And some of the top reasons to invest in diamonds: their value and rarity is recognized globally, and as Harold was saying, can be sold in any currency. And that is a huge bonus. Also, the easiest, safest, and most discreet way to transport wealth in the world. They're also not directly tied to a global market, which safeguards against market uncertainty. You don't see diamonds go down in value because the Chinese stock market is plunging. More than likely, you see them going up in value. Less than 1%, and this is an important factor, 1% of all colored diamonds mined are considered investment grade. No new mines producing naturally fancy colored diamonds have been discovered. That's why we're talking about rarity going ahead in the years to come, becoming even more of a factor. Colored diamond mines are shutting down without replacements. We know in 2021, the Argyle mine will shut down, as we talked on the last show, And that means 95% of the world's pink diamonds that are currently being brought to market will go away. And what people are looking for in the environment that we're living in today, financially and geopolitically, is diversification in a portfolio. Having assets that are moving in different directions depending on the circumstances that we find ourselves in. A hard asset diversifies your portfolio in a way that, obviously we're talking about diamonds, in a way nothing else can. And based on diminishing world supply, experts predict dramatic price increases in the immediate future, near and long term. And naturally fancy colored diamonds have never decreased in price in the past 30 years. Harold, we know that now is a time for hard assets. Invest in things governments can't print. As we were touching on at the early point of the show, if we head into another recession in the United States or Canada or globally because of what's happening in China or even other countries, what's happening in the oil market, obviously affecting countries' economies, the world federal banks, the central banks, really don't have much ammunition to combat it. And if we get into negative interest rates, as is the case in Sweden and in Switzerland, you want to have a hard asset that maintains its value. You don't want something that you're going to have to pay somebody to basically, if you have a bank account, you'll be paying them to have your bank account in the money in their bank because of negative interest rates, and that's being seen in the world today. You want investments, hard assets that banks, central banks, cannot print. We're talking about fiat currencies. And they're not printing any new diamonds. They're not printing any more gold and silver. And Harold, we have about 3 minutes left. That's an asset you want at all times in your portfolio.
You bet. You never put all your money into one particular asset, but diversification is extremely important. I know no matter what we say, certain people will always keep their money in stocks because that's what they're comfortable with, but I got to assure you at this particular point, every market has its time, and right now it's just way too dangerous to be in those type of markets. Whether you take our advice or not, one thing that you should be looking to do is to reduce your risk. And by reducing your risk, I mean getting out of investments where you could lose all your money. We never thought that was possible in stocks, maybe when we were younger and growing up, but we saw it in 2008. We saw General Motors go bankrupt and their stock go to zero. We saw that with many stocks. So again, with the state of the world economy, with as much money that has been printed over the last 5, 6, 7 years, this is all going to come back to bite us. And if we don't think so, we don't know these markets. Believe me, I know that these markets are going to come back and bite us because everything that's been done up until now has just been putting a Band-Aid on open heart surgery. Eventually, all the markets that have been manipulated are going to start to trade on their own volition again. That would mean gold and silver and stocks and bonds and commodities and everything. So again, at this point, you want to be conservative. You don't want to have your money sitting in risky investments. You don't want to leverage anything. You want to own your assets outright. And again, it doesn't matter what the name of the item is, it's what's going to give you the best return with the least amount of risk on your investments. And at this particular point, that is definitely the diamond market.
Investing in rare diamonds, something that everyone should consider in the geopolitical and economic times we're living in. To give you an idea, we were talking about that 16-carat fancy vivid pink diamond that could fetch $28 million. They said in almost the 250-year history of the auction house, only 3 pure vivid pink diamonds over 10 carats have appeared for sale. As large and as rare-colored diamonds of this caliber become increasingly hard to locate, the 16-carat fancy vivid pink diamond comes to market at a time when great gems are mirroring prices achieved by masterpieces in the world of fine art. That according to Raul Katika, who is the head of Christie's International Head of Jewelry Department. And you can read more about that vivid pink diamond coming up for sale at auction. $28 million. Also the blue diamond that could fetch $55 million. Harold, with about 30 seconds left, your final thoughts.
My final thoughts are be very, very careful. The volatility in these markets can take your money away, and we don't want to see that happen. Remain conservative, don't speculate, and hold hard assets.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Speak with Harold about our featured diamond. It's a 1+ carat radiant cut, fancy blue-green, extremely rare, one-of-a-kind worldwide. See it, rarecoloreddiamonds.com, featured diamond of the week. Harold has a generous invitation to anyone who listens to our show. If you'd like to speak with him anytime, call him at 1-800-432-1022 or connect at rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.